Hello everyone and welcome to another new video and another new series of the financial education. Today I'm going to cover the part 2 candlestick technical analysis. Last time we had seen single candlestick pattern. Today we are going to see two candlesticks and three candlesticks patterns. So if you have not seen the previous video, I would request you to kindly see that first so it becomes easy for you to follow up with this second video. The link to that previous video you're going to find in the video in itself or in the description below. And before I can proceed, I would request you to kindly subscribe to my YouTube channel if you have not done yet, and please do not forget to press the bell icon. Besides that, you're going to find two links, the WhatsApp and the Telegram group. Make sure you join both so that you get instant alerts whenever a new video or new earning opportunity is shared within the group, because that is where the things come first, and probably a YouTube it takes a little time. Moving to the second most important thing which I always tell is the disclaimer: I am not a financial advisor. As such, you're requested to do your own due diligence before making any investments. So let's move straight ahead and proceed with the candlestick analysis. Now, this is candlestick analysis part 2. As I mentioned, part 1 I have already covered. Just do a fast recap of what was there in part 1. So in part 1, there are three major types of candles. Bullish candles, you can see it's in green, bearish candle which is red, and neutral candles I've mentioned it red. So the normally the for ease, and you can see typically the candles which are the green are bullish, the red candles are bearish, and the neutral candles like doji and all, you won't find any color over here. And the single candlestick patterns what we have covered in the previous video include the marubozu candle, the spinning top candle, the hammer, the inverted hammer, the doji candles, which is the long leg doji, the gravestone doji, the dragonfly doji, 4-point doji. Now each of these candles and their implications has been covered in the previous video, and these are all single candlestick patterns. So in this particular video we are going to see two candlesticks and three candlestick patterns over here. So let's move ahead and continue with the same. Now in two candlestick patterns, as I have mentioned earlier also, there will be many more patterns in a single multiple this thing. You can't go along doing, but if you're interested, there are lots of content on YouTube, on fellow YouTube channels and other literature wherein you're going to find more, but I'm sharing with you one of my favorites, and the one which I find very useful in my trading journey, because I am doing live trading. So two candlestick patterns, the major ones include the bullish piercing, the bullish engulfing, bullish harami, bearish piercing, bearish engulfing, bearish harami. Then we have three candlestick patterns which includes the morning star, the three white soldiers, evening star, and three black crows. Now what does this individual mean, how to identify them, and how to check them on the live charts? Both the things I'm going to cover over here. The first is the bullish piercing. Now you can see the first candle formation what would be there is a bear candle. As I told you, a bear candle would be green in color, and a bull candle, sorry, a bear candle would be red in color and a bull candle green. So this is a bullish a bear candle formation. Then you have this is the 50% line. That means this candle length of this candle, half of this, and a bullish piercing. So in a live chart, what's going to happen is this particular chart will be populated like since it's a bear, the price will be falling, and then you'll have a bullish candle formation over here. So it's going to move up, and it's going to cross 50% of the body of the previous candle. So this, as I mentioned, is a bearish, and this is the bullish candle. Basically it's a two candle pattern. The first candle is bearish typically. So for you to call these two a pair, you'll be finding many candles in your technical analysis, but to call them bullish piercing, it needs to follow a few criteria. So one, it is a two candlestick. The first candle is to be bearish and followed by a bullish candle. The second candle closes above 50% of the previous bearish candle. What it means is that, like, this is open, this is a close for this candle. So when this candle closes, this has to close more than 50% of the body of the previous bearish candle. The gap down on close of the previous candle. What it means is, you can see this is where the previous open was, the close was there, because from here is a fall. So from here, gap down, that means it's, you can see there is a slight gap down, so it moves from down to up. And when you see this kind of a bullish piercing pattern formation, it implies uptrend, and it has more weightage when you find this particular pattern at the bottom of it downtrend. So let's try and figure out. Now you can see a candlestick, a chart, live chart over here. So you can see there is a sideways movement, and the market is falling, the price is falling over here. There is a bear run over here, and you can see here is the bullish piercing pair. So let me go back to the slide. You can see previous is bearish, next is bullish, crossing 50%. You can see bearish, bullish, it's crossing 50%, and you can see it has come at the bottom of the downtrend, and once this has appeared, you can see a bull run taking place. So next we'll move to bullish engulfing. Now in bullish engulfing, you again have a bear candle first and a bull candle later. Now criteria here is, it's a two candle pattern again. First candle has to be bearish followed by a bullish candle. Body of previous bearish candle is fully engulfed or covered by the bullish candle. What it means is that the previous candle, this is the body, these are the wicks or the shadows. This particular body of this particular candle is fully, you can see this is, if I draw some imaginary line over here, from here and from here, you can see this full thing is sort of engulfed. That means covered by this particular candles. So this is the very important criteria to call it a bullish engulfing. Now again, this is significant when found at the bottom of the downtrend, and it implies a upward trend. So let's move ahead and check it out on live charts. So you can see this is again a sideways movement happening over here, and you have a huge bullish engulfing over here. Okay, you can see, and the criteria is, previous is a small candle, next one is a big candle which covers it fully. So you have a small candle over here, that's a red candle, and a big candle over here, and it can get the sideways. Like you can see, it's almost it's in a sideways market, but even when it comes in a downward trend and you can find this, you can see that once this appears, there is a very good chance that a market will move up. Next is the bullish harami. Now for people in India, you might find this as a bad word, the word harami, but it is a Japanese term. So what it means is basically a pregnant lady. So again, a bear candle, a bull candle. Now if you see this, why it is called a pregnant lady is, just imagine this to be the lady, and if I just draw kind of an imaginary line and this as the belly of the lady, and kind of here, so it's like a pregnant this thing and a baby inside. So this is identically opposite to the bullish engulfing. So there you have the second candle engulfing this, so here you have this one. So it's, that's why it's called a bullish harami. So it's like a baby over here inside the stomach of this particular candle. You can see bearish candle, bullish candle. Criteria again, it's a two candle pattern. The first candle is bearish followed by a bullish candle. Body and wick of the bullish candle is within the body of the previous bearish candles. So body, and this is the body, and this is the wick of the bullish candle, which is this, is within the body of this previous candle. That means the wick and the body of the bull candle is within the body of the bear candle. This is a very important criteria to call it a bullish harami. What again it implies is an uptrend when found at the bottom of a downtrend. So let's check out over here. So this is a thing. It's not a huge, but you can see obviously there's a, if you draw a line, trend line, you can see it's a big drop. So here you see the previous one has to be big one, red, and the next one has to be green. So this is a big red candle and the next one is green. The wick as well as the body is within the, so you have a bullish Harami candle formation, and then you have a trend which is moving upwards. Then you have within, now first three what we covered were the bull candles for two candlesticks wherein it shows a bull run. Now we're going to see two candle patterns which are going to show you a bear run over here. So the first is bearish piercings. Just like you had bullish piercing, you have a bearish piercing. So here you can see the first candle here in all the three examples what we had seen. You had the bull bear candle first and the bull candle. Now here you'll have the bull candle, that means the market is in an uptrend, and then you have a bear candle formation. So typically what's going to happen is like the price will be moving in an uptrend, it's going to be moving like this, it's going to move upwards, and it comes and closes over here. Then you'll have still the rally moving upwards, and then you have selling pressure and the bears taking control, and you're going to have this coming. Now when this comes and closes 50% below the body of the previous bull candle, you're going to call it a bearish piercing. That's what the first candle is bullish, followed by bearish candle. Second candle closes 50% of the previous bullish candle. That's the body 50% which is there. And you can see this is gap up. That means the price was still moving higher from the close of the previous candle. And this, especially when you can see this at the top of the uptrend, okay, it implies a downtrend. So it implies a downtrend if found on the top of the uptrend. So when the trend is moving upwards, and if you can see this right somewhere at the top, you can expect a price correction taking place due to a lot of selling pressure or profit booking. So let's move and check out in one of some charts over here. So you can see there's an uptrend going on. What is the criteria over here? Okay, so you have the previous candle is green, the next one is red. So you can see there's an uptrend, a previous big candle over here, the price going up, but then you have gap up and bearish piercing formation at the top of the trend, and you can see the price moving downwards and then moving sideways. So when you can see this particular pattern, expect the price to go down. The next set of bearish candles are the bearish engulfing. So once again, just like you had a bullish engulf, you have a bearish engulf over here. So the criteria again is a two candle pattern. First candle is bullish, followed by a bearish candle. Body of the previous bullish candle is fully engulfed. So in this case, the bearish candle is engulfing the bullish candle. So in case of bullish candle, bullish engulfing, what it would be? It would be the opposite way around. This would be bullish and this would be bearish. So this is again significant when found at the top of the uptrend, and it implies a downtrend. So wherever you are going to find a bearish pattern, and if those patterns emerge at the top especially, there is more weightage for it when it appears at the top or at the bottom of the trends. So if a bearish trend is appearing at the top, it implies a downtrend. If a bullish is appearing at the bottom of a downtrend, it implies a change in uptrend. So let's move and check out in the chart. So before that, this is a green small candle followed by a big red candle. So you can see over here there is a sideways movement, and you have a small candle, and there's a big engulfing over here. So it's a big bearish engulfing happening, and then you can see that after a little sort of recovery, there is a huge kind of a fall over here. Then the next which is there, which I'm going to cover, is the bearish harami. Just like your bullish harami, you have a bearish harami too. Again, it's a pregnant lady kind of a formation, and you have a two candle pattern. The first candle is bullish, followed by a bearish. The body and wick of the bearish candle, which is this, is within the body of the previous bullish candle. It implies a downtrend when found at the top of our uptrend. That means if this is found at the top of the trend, you can expect the prices to go down. So here you can see a trend which is there. You have a price which is there moving upwards. There is a this thing, and you have a bearish Harami formation over here. Let's go and check it out. A previous candle green, big one, and the next red one is small and within. The previous big green candle at the top of the trend, and the red one is within the body of the previous bull candle, and you can see the resultant. The price has moved down. Next, we are going to cover the three candlestick patterns. So I have covered major two candlestick patterns which are there. Now let's go and check out the three candlestick patterns. You have a morning star. In the morning star formation, you have a first a big after a downtrend. Sorry, a downtrend. In a downtrend, you have another. You can see the price would be something like this, moving downwards, and you have a big drop, and then a kind of a spinning top or probably a doji followed by a bull candle. So when you see this kind of a formation happening, especially at the bottom of the downtrend, you can expect a trend reversal taking place. So this is a three candlestick pattern. First candle is bearish. Second can be bearish or bullish, but has to be a doji or a spinning top. What it means is this color, what you can see over here, it may be a red color, it may be green color, or it may be without any color like a doji. So that is what it implies. So this color has no significance over here. It may be red, it may be green, or it may be even without any color. It's a doji. So, or like a spinning top. Third candle has to be bullish. So what's the criteria? The first bearish, and the second a neutral candle, and third is a bull candle. So you have all three types of candles when they are come together at the bottom of the downtrend, and they follow this sequence. That time the price again found at the bottom of the downtrend implies change in uptrend. So basically this is how the chart would be forming, and you have this followed by another dip, and then you have a correction happening over here. So when this comes in, expect the trend reversal to take place. You can see there is a downtrend happening. As I told you, it can be a doji without color or with a color. So you can see a downtrend, a previous red candle. Then you have a colorless, that's a doji over here, and you have a green candle. So you can see like a morning star, it's a small one. There is a correction, a pickup over here, but again there is a drop. But you can see again a formation is there. This time you can see a green candle over here. This is kind of a spinning top, not exactly. You can see the upper wick a little high. Yes, you still can call it a spinning top. So you can see over here, it might be without color, it may be with green or red, but if the previous candle is red, and the middle candle, the point would be low, and the green candle moves up. You can see the trend, like here also the trend was upward, when again it forms over here. Like this was kind of, doji is normally indecisive candle. So when you have something like this, it has more weightage. So when this has come, you can see the price has moved upwards. The next bearish candle, that's the opposite of morning star, is the evening star candle. Now evening star, you can see over here, it's again a three candlestick pattern. Now how this would form is that the trend would be like this. So like from bottom, the price is moving upwards, it moves high, closes, then it moves again high. From here it moves high, closes, and then there is a downtrend. It changes over here, it closes, moves down, closes over here. So if you see over here again, this particular candle color, just like your morning star, is immaterial. It can be red, it can be green, or it can be a doji too. The criteria is the first candle should be bullish, second can be bearish, bullish, or a doji. Bearish, bullish means your green or a red candle, but it has to be a doji or a spinning top. The third candle has to be bearish. Normally, if this is found at the top of the trend, you can imply that it's going to change the trend to a downtrend. So let's check it out. So you see here there is a sideways movement kind of a thing, and the price is moving upwards, and then you have a doji formation, evening star. You see green, big candle followed by a small one and a red color. So you have a big green, you have a spinning top, and you have a red colored candle, and you can see the price from here has started to move downwards. The next set of three candlestick patterns, what you're going to see are the three white soldiers. Now, white, you can see, although the color here is green, I am calling it white because in earlier times, wherein in the monochrome era, where you had black and white colors, instead of green, you had white, and where red was, it was supposed to be black. So, when three white candles were formed, they were called three white soldiers. So, in this case, you have three green formation. So the formation would be like this, like one candle, then you have it moving higher, then you have it again further moving higher. So you have a trend which could be sideways or it could be moving up. So basically these candles are trend continuation patterns, or you can be a trend changing. So if it's coming at the bottom, it is upward. If it's coming on a sideways also, it implies it moving upwards. So it's a three candlestick patterns. So as I mentioned earlier, it was white candles, hence the name white soldiers. All three candles are bullish with a prominent wick or even a Marubozu candle. So you can see, there will be a good solid body over here when there's a good bull run happening. Sometimes you won't have this wick. So when the wick is not there, we call it a Marubozu candle, explained in the previous video. So this can be a trend continuation, especially in a bull run. So if found at the bottom of the downtrend, it implies change to a uptrend. So let's go and check it out on the chart. So you can see there is a trend movement which is there. There is a slight downtrend and an uptrend is going, and you can see three white soldiers appearing over here. You can see Marubozu, which I was talking of. There isn't any wick over here, so it could be a regular with a wick or it could be a Marubozu. So you see three white soldiers. There is a consolidation phase happening over here, and then the price moves really high. So when three white soldiers are coming, you can expect the bull run to continue. The last from the series of this candlestick patterns, multiple 2 and 3, is the three black crows. Now this is just the opposite of your. Now black again here, as I mentioned earlier, instead of red, black was used. So you have, this is the way the candles would be formed. So you have a downtrend happening. So in a downtrend, if you see three candles happening like this, 1 2 3, like this, 1 2 3 moving, you can expect the trend to continue and the bear run to continue. Now it's a three candlestick pattern. You have, earlier you had black candles, hence the name black crows. All three candles are bearish with a prominent wick or even a Marubozu candle. The trend continuation, especially in a bear run. If found at the top of the uptrend, it implies a change in downtrend. So let's check it out on a chart. You see here, this is a slight, there was a slight, kind of a price moving in the upward direction, not a big change, but there is a spinning top over here, and you have a three black crows appearing over here. So you can see this is at the top, and then you have the price falling down, a little of a consolidation, and again a huge drop. So technical analysis is a very, very interesting thing, and it can help you trade and give you the correct entries and exits. Now besides that, there are a lot of indicators and stuff which I'll be covering in future videos. So make sure that you are watching both the part 1 and the part 2 of the candlestick analysis. So I hope that you've watched and you've loved and you've enjoyed this thing, and it's going to add a lot of value to your trading. If that is the case, please make sure that you share this video, do like the video, and if something is not clear, please ask me in the comment section. I would be glad to reply to you, and please do not forget to press the bell notification which is there. Besides that, as I mentioned to you, this is my WhatsApp and my call. If anytime you need any help, you can buzz me, and my Telegram ID over here. Make sure you subscribe to the channel and do join both the WhatsApp and the Telegram channels too, so that you're going to get instant alerts whenever such new videos and such earning opportunities do come up. So promising to continue with this series and giving value to you. As I told you, this costs a bomb if you're going to try and go for paid courses. I'm sharing my practical knowledge with you. So do share it, do like it, and until the next video, take care and be safe.